Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, July 17th, 2023. We're going to take a very brief look at the equity markets and then some of the stocks that stand out. Like I said, I've been scouring, looking for individual trade ideas lately. The overall broad market's sort of stalling out here because the market leaders have gone nowhere for a couple weeks now, or the past month or so, the big seven. They're all set to report. So additionally, you're unlikely to see any big movement there, especially after the run-ups they've had. If anything, you'll probably see some profit taking into earnings. And I'm talking about the big seven, or whatever they call them now. It used to be the FANGs. Apple, Microsoft, Amazon, Meta, Nvidia is now in that, Tesla as well. So keep in mind they're all going to be reporting over the next couple weeks here. And let's just take a look at the earnings calendar for this week and see what stands out. Let me change my tool color here. Today was really nothing but some, we have a ton of regional banks reporting this week. We had a few small ones today. Tomorrow, Bank of America, that one has potential to move the market. A couple big brokers. You have Schwab, Interactive Brokers, Morgan Stanley. You can see the list here, a lot of big regional banks, and so forth and so on. Wednesday, Goldman Sachs, you have before the open. After the close, Tesla, that's certainly a potential market mover. You have Netflix and so forth and so on. Thursday, Taiwan Semi, obviously big semiconductor company there. Intuit Surgical, Johnson & Johnson. So you can see the lineup. And then again on Friday, a lot of big regional banks there, Comerica, Huntington Regions, and so forth and so on. So that's what we're going to watch for this week. Next week, you'll even have some bigger market leaders, big tech stocks reporting as well. So next couple weeks, probably going to see some increased volatility. I think that's safe to say. Okay, and until then, let's take a quick look and take a look at the indexes. Start out with, let's go to QQQ, the 60-minute chart, which is what I'm focused on right now to a large extent. Try to gauge the near-term direction. There's our primary uptrend line. Still hasn't been violated, hasn't even been touched. We touched the comparable trend line in the NASDAQ futures. We might have hit that in pre-market on QQQ, but we're above it. And so I've been saying for weeks now, unless that goes, we're not going to see much of a pullback, because that's our primary uptrend line. But when that goes, that will most likely send us quite a bit lower and potentially all the way down here. I think that's a very good swing target, that 321.50-ish level right there. Let me do one other thing here. All right, so shorter term, we have a little minor uptrend line that was just taken out late last week. There it is. And we're still below that trend line. I'm going to show you something on a 5-minute chart here in just a second, but let's look at the futures. NQ, NASDAQ 100 futures, 60-minute chart. Same thing. We have the primary uptrend line right there, which was recently tested, and we did it with positive divergence in place, a little divergent low. And these are swing trading time frames, divergent high. We're working our way up in a near-term uptrend with these little divergent highs and lows, but this divergence gets bigger and bigger and bigger, and will most likely, once we get a trend line break, it helps to gauge the magnitude of the next correction, and by all means, this is the measured target for that wedge. Would take us down here to about that 14,431 level, and that's going to be a drop if we get it about close to 9% from where we're at right now. So pretty healthy correction, priced into the 60-minute charts right now. 15-minute chart of NQ. We can zoom in. Here's that little minor uptrend line that we just had taken out last week. We flirted on this level. You can see I have a price alert set, 15,676, right about there. It's really nice support. Just before the market opened today, before the regular trading session, we had a couple brief spikes below, but we've been closing on it. And so I have this alert set. Again, that's 15,676 and a quarter is where I have it. You could put it at an even 15,676. And then on ES, the S&P 500 futures, you can see we have the same divergence building. That's the negative divergence here on the 60-minute chart. When we've had these series of divergent highs, it's not as if they haven't played out. They play out for little corrections with the divergent low. And this is just our swing trading time frame. There's active swing trading time frame. So we have the bigger divergence in place, and we also have the smaller divergence like we had here and here, and that's right here. You can see as we come up there, that's the divergence. So we broke that trend line last week, and as I speak, we are back testing. Let me zoom in nice and tight for you so you can see. You can see I have an alert here at 45.2775. So if and when both those alerts, the one on NQ and this one, fire off, that's that recent support, including this morning that we've been defending. And so those are the levels that we need to see taken out. So if this chart's going to play out as I would suspect, and we have our trend line break and a current back test, this is probably where we'll get rejected. Maybe we have another hourly candle that comes up on the line. A solid print above there means you've regained the trend line, and then that really kind of mucks that up. That whole case for another leg down right now, a reversal down to that level. But that to me looks like the most likely scenario. And just to zoom down again, active trading, you go down to a 5-minute chart on QQQ, and you can see it's kind of a wash, rinse, repeat thing. You look for these divergent highs. That's where you have these indicators. You know what? I'll have to jump out to a 10-minute chart. That's as far back as I can roll. So let's just kick this out a little bit longer. It's basically the same thing. We're just looking at 10-minute candles now. And you can see we have a divergent high, a little wedge. This is the world of active trading. Even in an uptrend, you can gain pullbacks. You look for divergent lows. You look for pullbacks to support, and that's where the trend ends. So there was a wedge break. Remember, I always say divergence is not a sell signal. It is an indication of a trend reversal. And so you had the sell signal come on the trend line break, drop, positive divergence. You can see your indicators, rally, divergent high, correction, divergent low, indicators making bullish divergence, rally, divergent high. Oh, that trend line didn't carry over on this 10-minute. The divergence line, not a trend line, divergence line. Divergent high, divergent low, and again, we are at a divergent high right now. So I need to duplicate that, and oh, no wonder I was clicking on the trend line. All right, so divergent high, duplicate, and that just goes right there. All right, so that's it. And so that this 5-minute chart, let me just show you what I see here. So as I zoom in a little tighter, based on the scope of this 5-minute, this pretty steep 5-minute wedge with a nice clean up trend line, a clean breakdown there. You can see your divergence, nice clean negative divergence as well. It would be atypical of the end of that corrective wave. That's a single wave down. Usually corrections at minimum come in an ABC form, and you can see here every other time you broke down, you had a little kickback rally, and then there was more downside. It played out in several waves. Again, little kickback rally, then a bigger leg down, worked our way down, and all these corrections on this time frame did not end until you had a divergent low. That is not an absolute necessity to end up to a downtrend, or a corrective wave in an uptrend, but it's certainly something to look for. So again, this move right here so far, one leg down, little kickback rally, would indicate to me we're going to at least come back, backfill that gap, go down, have at least one more leg down, again, based on how it's played out in the past with all these other breakdowns, kickback rally, and at least one more leg down. So that's what we're looking at here, and the fact we're back testing right now on the SPY, it makes it an objective short entry if you are an active trader. Yes, the primary trend's up, so you can look to buy dips wherever you want. Again, you have earnings coming up, so I'm not going to be covering the markets as much as I would normally until earnings are out of the way, so I just wanted to give you these quick kind of short-term charts for active traders that care to trade. Now let me share some other trade ideas that I came across. One I want to just mention, this is one I've been updating, it's wheat. So wheat popped today and ran right into, if you recall lately, said we had the breakout here, impulsive leg up, hit the second target, pulled back. We've been back testing the downtrend line. And as I said, the problem with buying a back test or going long in a back test is you can continue to back test. So what I like to see is an impulsive reversal off there. So we saw on Thursday and Friday 2 green candles, nothing impulsive. Today was impulsive this morning. We had a rally right into that. As I've been saying, I'd like to see T1 get taken out. and we rallied right into T1 and got rejected. So at least it tells me, well, number one, it was an impulsive move up so far. Again, we're back down to where we started. I'll show you on a 1 minute chart. We kind of came full circle. Futures were moving up before the market opened. This is an ETN, so it starts at 9:30, and the ETN seller stepped in and sold. So people in wheat, who I suspect probably want out of their long position, sold. And I'm going to view this as, let me be careful with my words, semi-healthy. The fact we got rejected there is not healthy. It's not. I can't make that. But the fact we have had 3 days up pretty impulsively or back down, here's what I would say. What I've been saying since last week, we need to take out T1, and I think once it does, especially the fact we already ran up there today, and this was the first test of that level since we broke it. Remember, T1 was a former first price target after the breakout. And so this helps to validate it as a significant resistance level, the fact that we ran into that today and we had a reaction, a pullback there. So I believe now if we can come up today, that's going to be quite bullish, and it should be the catalyst for us move up to, really I'm looking for the next leg up to at least my third target zone, and that ultimately that fourth target. So it's not an add-on point yet because we haven't taken that out. But that's what I'm watching for on wheat. I'd rather not see another back test. If you do, it's just, it's no big deal. If you're in it, you have to decide where to stop out. But the preferable, price action for me right now would be to see another run at and a clearing of the recent highs there to take that out. Okay, hopefully that makes sense. Corn and wheat, move together quite often. So you want to see the same thing in corn. Corn also had, just like wheat, a big divergent low, aka positive or bullish divergence there. You can come across these indicators here and see that divergence forming for a while. Had, just like wheat, an initial pop up. They sold into that. And with corn, you just fell right back to an excellent support level, 2188. Same level we rallied off there. It was support. What was resistance back here? Resistance. We broke it. Back test 1, back test 2. So far, a successful back test. And with divergence. So, same story. Corn started to run. It popped this level here. They faded that today. But look, it brought us right back to support. So, here's what I want to see, and if I see this, a rally off here, ideally holding around these levels, maybe a little bit lower, and then taking out today's highs, and that should send corn up as well, along with wheat. Okay, and now I'm just going to rifle through some of the trade ideas that I came across stand out recently. Some of these are actionable, some are positive or bullish or bearish setups. I'm just going to go over these in no particular order. FFIE. Faraday, Future, Intelligent Electric, low price. But what I'm seeing, remember, the trade lately, for me at least, has been the dash for trash. Looking at these low quality stocks, questionable fundamentals, some of which are penny stocks or were recently penny stocks below the $1 share price. But this one, you have some decent volume here on this one for a penny stock. With that being said, you always have a lot more risk when you're trading penny stocks versus stocks above, especially above the $5 mark. But there it is, a nice clean breakout, big divergence. And what I'm noticing, a lot of these companies that have to do with the Inflation Reduction Act, it's painful for me to even say it. But anyways, for the IRA, or Inflation Reduction Act, IRA they call it, a lot of these are obviously electric vehicle makers. And I'm noticing the ones that have, almost a pure play electric car manufacturers right now look better than the big automakers, which obviously are moving towards electric vehicles, but still make a lot of gas and diesel engines. But either way, this one, look at that. I see a breakout, initial leg up, rallied into the 200-day moving average, pull back, and it made a so far 3 higher lows right there. And so again, low priced, aggressive stock. But if you buy it, you just put a stop somewhat below the recent lows, or even a tighter stop, and let it run. I think it'll make another run at the 200 and probably clear it as long as the momentum stays in this sector. Again, scrub everything for earnings right now. Let me just show you some of the electric or gasoline or traditional auto manufacturers. Here they are. You have Tesla. I've been covering quite a bit. Remember, they report this week. There's your primary bear market downtrend line, which I said would be a likely target. It's a kind of magnet when you get that close. We're right there right now. Big divergence on Tesla. I already gave you my thoughts. If I had to bet either way, taking a stock in earnings is always a gamble, but you have big negative divergence. You're at resistance, and I figure it's either going to get rejected here off the trend line, possibly have a little post-earnings spike into around that 316-ish level, and then ultimately these divergences are likely to play out for a big correction, and I would swing Tesla all the way back. I'll just give you a preferred target right now. There's quite a few. You have a reaction low there, 241. But I think if we do get rejected off the trend line, which I suspect we will, that would be based on the charts, probably come back here to 218.11. And from where that is right now, again, they're not going to report until, what was it, Thursday? That's a 24% drop. If that happens, it's going to put pressure on the NASDAQ 100 as well. But let me just look at some of the other automakers. So here's Toyota Motors. And of course, Tesla is a pure play electric, by the way. So they're obviously benefiting more to the whole IRA than some of the others. But you have an island cluster top on Toyota Motor TM. You can see the downtrend line. We had a downtrend line was taken out. We've had a pretty good run up in a lot of automakers, but an island cluster is a potential topping pattern, and it's basically when you have a cluster of candles, in that case 3, separated by gaps on both sides, and that's exactly what that is. That's a textbook island cluster. It's a topping pattern, and what you want to see ideally is you want to see prices remain below the cluster, and so far they had. They tried to run back up, went into the gap, but couldn't get all the way up there and get back above that cluster. So this one looks like it's headed lower to me based on that topping pattern. Race, this is Ferrari. Beautiful uptrend line in which to trigger a short entry. This would only be a trade setup, not an actionable trade. You can certainly buy pullbacks to the trend line, but these divergences are big, and this uptrend is getting very long in the tooth. So this one, to me, the next trade on it is a short, and it's only a short if and when that trend line breaks. And I'll have to update the chart, but I would say probably come on back. Minimum probably pull back, and looking at a double-digit drop down here, about 10%. Ford, same thing. See a lot of these traditional automakers. You had negative divergence right there. You had a nice clean uptrend line. You had a breakdown. 1, 2, 3 confirming red candles after the breakdown. And it was actually a breakdown and a back test. Breakdown, back test of 1, 2. Third day you got rejected, and boom, Ford's already down, in the last few days about 8%. So that's what I wanted to point out to you, is that when I look at a lot of the traditional automakers, GM starting to move lower, Honda, had a little doji right there, an island top. But Honda's always going to gap because it's a Japanese company, and you're going to trade it. Trades on the Nikkei. So then when these ADSs, which is an American Depository Receipt, that's when a stock which is based in another company trades on another country. Trades on their exchange. They package up those shares into what they call ADSs, American Depository Shares. Or ADRs, American Depository Receipt, similar thing. And because of that, it's going off those Nikkei hours, and you're always going to get these gaps. So where I'm going with that, it's kind of don't read too much into an island cluster top on one of those. It matters more on stocks that are primarily based on one of the U.S. exchanges. That's it. LI, bearish rising wedge, negative divergence. It's a setup right there. Rivian, we already traded this one. That was a trade up there, hit T2, natural reaction so far, pulling back off T2. All right, I don't want to go through them all. I just want to do the big ones. I have a lot more automakers in this list. I'm going to go over the remaining trade ideas. We'll be finished this video in less than 5 minutes. Solars are also quite a bit of solar stocks look good to me right now. Again, other beneficiaries, I'm sure, of the IRA. There's a breakout right there. You had a nice clean downtrend line. This is SNW, Sunworks Inc. There's your downtrend line, breakout candle. You've got the 200s just above. If it can clear those with conviction, this one could run. A VVPR, nope, that's not one on my list. I just clicked the spacebar on the keyboard and it cycled to the next stock. I got to manually type these in. ASXC, this is, what is that? Census Surgical, nothing to do with solar, but a nice little breakout, low price penny stock. If this stock can get above the dollar share, that's usually a bullish thing too. Then they don't worry about being delisted. But I see in this one positive divergence breakout, and it's running. And little stocks like this can continue to run. And I would tell you, first target would be because it just broke out 87, and then roughly $1. XAIR. Nope, that's not it. Sorry, hit the space bar again. BHC. This one, Bosch Health, nice resistance right here. Potential bottoming pattern coming off this big divergent low back in August of 2022. And it has just been checking that 930-ish level right there. So if it can pop that, there's a big old thin zone above. You have a gap right here, big old gap, but even then it's pretty thin from here on down. So this stock could run quite a bit. So there's one to watch. Set an alert, wait for high volume, check for earnings, etc., etc., etc. HYZN. I have a note. Most of these so far have been long trade ideas. This one, another auto manufacturer. I've highlighted a few of those lately in this video. We just covered some of the bigger ones. But this one is rallied into resistance. So we're coming off a big divergent low that was bullish. Wish it was on my radar back then, but it wasn't. And we've had a heck of a run. To say that this stock is overbought would be a gross understatement. The RSI is pinned at 84. Last time it was at overbought was right here. And from that overbought reading, the same 84-ish level, the stock fell 97%. So this is what we're in, guys. We're in that dash or trash, as I mentioned last few weeks, last month or so. That's where I saw the best risk reward. It doesn't matter with fundamentals. Again, you're seeing money moving into the lower tier, low price stocks. And that is a game of musical chairs. So I would imagine you're going to see some profit taken here. You could short it if it's an aggressive trade because it's a low price stock. It's over $1, but it's $1.74, and try to game a pullback trade, maybe all the way back here to the $1 level, if that's your cup of tea. But it's aggressive, and of course scrub it for earnings like everything else. Run is another solar company, RUN, Sunrun. No buy signal yet, but you have a nice clean downtrend line right here that comes off the early 2021 highs. It like many stocks, it's still in a bear market. This is a tale of two tapes. You look at the market leading, the biggest companies out there, the big seven, the big tech stocks. Some of those are all-time highs or multi-year highs, but many aren't. And then when you look at a lot of the other low quality stuff, these guys are solidly entrenched in bear markets, But if the if the bear market is truly over, and if we just went through a correction in 2022, and we're in a new bull market, and we're going to see new highs. Ultimately, a lot of these guys will break out. And this is a $21 stock, so it's not like it's a penny stock. Coming off that main thing, it's coming off the big divergent low, 200-day moving averages in the downtrend line just above. I haven't marked it up for targets, but I can tell you right now, first target would be roughly about there. I'm just kind of doing this quick. There's a little bit of resistance right there. It needs to clear too. Second target would be up here around $39. Okay, a couple more and we'll wrap it up. AY Atlantic Sustainable Infrastructure PLC. This one has just broken out above this downtrend line right here. Let's zoom in a little tighter. There's your downtrend line. There's your breakout. Big positive divergence, and be a couple stops along the way for sure. About right here, and ultimately this would be right now my max target up there about 28.83. Stops depending on what you're swinging for. All right, let's look at Nova, OVA, Sonova Energy International. It's a solar, and see my common theme here. A lot of these solars, especially those that haven't yet already run hard, are starting to either poised to break out, or in this case, this one broke out, back tested again, and it's been rallying. And the first target I'd have on this one would be up there about 23.90. Then primary final near-term target would be the intersecting downtrend line and that $26 level there. If that is hit, That's going to give this stock about another 18%. So in no man's land now, I have to tell you that. That's what I call stock smack between support, which is now the trend line, and resist. Although we have support right here. So I would say, you can take it here. All the better if you got to pull back to 1967 with a stop somewhat below. Somewhat, you got to give these solars a little room. They're pretty volatile. This one's up 6% today, and that's just a run-of-the-mill move for it. So what I'm getting at, you can't run a 2% stop loss, trailing stop loss on a stock like this. They'll just take you out on the day-to-day gyrations. Got to give it a little room. So beta adjust your position size down. If you're going for a 31% gain or whatever it is from where we're at, 30, close to a 25, you can allow a little bit wider stop. Maybe scale in half a position here. If it does pull back, you can take another half there with a stop somewhat below. Alrighty, a couple more. Still on solars. Nova. Nope, I just did Nova, didn't I? Yep, sure did. We already did that. Look the same as AY? No, that was different. Okay, SPWR. SunPower, another solar. There's your downtrend line. See, very similar charts. Again, this one's at a multi-year low, peaked back here when most everything else did, when the correction started. We'll call it a correction, bear market, whatever you want. Down 84% from that point. But again, this is what people are. These kind of stocks are what people are flocking to lately, with the big techs being just bloated right now, just overvalued, overbought, a lot of them with divergences, etc. So better risk reward profiles, and these are aggressive little stocks, and they're counter trend trades. So I don't think I need to say that, but let me say that a counter trend trade has a much higher risk of failing, because it is if you're going long a stock in a downtrend, it's just like shorting Apple right now in an uptrend. It's a counter trend trade. And I'll maybe get to Apple in 1 second. We'll wrap the video. Oh yeah, that's the last one. Hey, if you don't do individual stocks, TAN is a solar ETF. The chart doesn't scream to me. I went through a lot of the components. Some have already run up a little too much. First Solar is lofty, for example. This is a component, one of the big solars. Just put in a divergent high. In fact, it's been diverging. So I'm not as big a fan of going with the ETF right now, which is TAN. Because of this, I'd rather do individual security selection in the solars than a broad-based blanket approach, because that ETF, again, there's just some disparity in the chart. Some of these stocks I'm not going to short First Solar right now because the momentum's pretty healthy in the sector. But I would, if I had to do one of the two, I would short First Solar and then go long the most bullish names, which are the ones I just showed you there. And then just on that, just side note thing, the Apple. Remember, we had the breakdown the other day. Made it clear that even though we broke down, I don't think it was a short at the time, because of the fact that NASDAQ 100 at that very day was testing support on the NQ futures, same support levels covered in the morning, and those levels haven't gone. Apple continues to back test. Right now it's back testing today, and that's what I've been saying. The problem with when you're looking at a back test, you can continue to back test. So what you want to see is an impulsive reversal. It might wait until earnings next week. I think it should be next week, the 28th, whenever that is, or the following week. And but it is a breakdown, and it is below trend. So post earnings, my expectation would be the stock does this, even if it has a brief, after hours pop. Again, read very little into the initial reaction when a stock reports after the market closes. There's always that initial pop or drop. Then comes a conference call where they give, many companies, not all, but most, give guidance in a little more, visibility to the what their earnings look like, and kind of break it down. And so often I've seen a stock rip or dip, immediately follow earnings, only to see it go the other way afterwards once the market opened, and then in the following days to weeks. So. All right, that's it. Let me get let me get this video out to you guys. I'll continue to look for trade ideas, but at the end of the day, peak earnings season we're heading into it. Really, next week is what I would call peak earnings season, peak earnings week. I'm sorry, but we're thick into earnings season now. So if nothing else, maybe keep it a little bit on the light side, and either that means smaller position sizes or fewer trades, or both. All right, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.